Hello friends, welcome to UGC Net Commerce by Maria. So today we are going to see the PYQs and the MCQs of mergers and acquisitions. The very first unit, very important chapter in terms of UGC Net. Let's a speed MCQs and PYQs test we shall see, dear friends. We'll go into the slides. Which of the following terms refer to the combination of two or more companies into a single entity where one company continues to exist while the other lose their separate identity? So you can answer. Next slide we will see the answer. Which of the following terms refers to the combination of two or more companies into a single entity where one company continues to exist while the others lose their separate identity? What could be our answer? Amalgamation, absorption, consolidation, acquisition. So the answer is absorption. The answer is absorption. So when the combination of two or more companies into a single entity where one company continues to exist while other lose their separate identity. So two companies come together, the one company remains, but so one company absorbs, takes over the other company. That is the answer, dear friends. So we'll move forward to the second question. When two or more companies combine to form a completely new company and the existing companies are dissolved, the process is known as. Understood? When the two or more companies combine to form a completely new company and the existing companies are dissolved, the process is known as, again, absorption. We already know one company takes over the other. Acquisition. What is acquisition? Consolidation, internal reconstruction. Let me know the answer. You can comment or you can pause the video and see. Yes, the answer is consolidation. The answer is consolidation. So, when two or more companies combine to form a completely new company, okay, not absorption, not acquisition, taking over the other. Here, completely new company is consolidation. Consolidation. The third question. The process by which a financially sound company purchases controlling interest in another company is called. The process by which a financially sound company, okay, which is a company is financially sound, that means a wealthy company purchases controlling interest in another company is known as. What it is known as? Amalgamation, acquisition, capital reduction, internal reconstruction. So what is your answer? What is your answer? Let us check what is the answer. It is acquisition. So the process by which a financially sound company purchases controlling interest in another company is called as acquisition. Okay, we'll go fast so that you can also learn. These are like technical terms you should understand and the definition meaning. Okay, the term external reconstruction refers to. What is the meaning of external reconstruction? Reconstruction means they reconsider their all assets and liability to, in case the company is facing loss, to reduce the burden. So what could be internal reconstruction and external reconstruction? In the coming questions we will see. I also upload separate conceptual classes wherein you can come to know the concepts. Here only the PYQ series we will run through fast. So here we will not be explaining the concept so much because most of you know the concept, you just want to know the PYQs. So we will do it faster PYQ series, but conceptual classes slowly one by one I will try to upload. So the term external reconstruction refers to reorganize of share capital within the same company, formation of a new company to take over the business of an existing company, increase in authorized share capital, transfer of assets without liability. So what is your answer? Yes, we already know external reconstruction means formation of a new company to take over the business of an existing company. This would be reorganization of share capital within the same company will be internal reconstruction, right? These all other things are meaning internal reconstruction. So formation of a new company to take over the business of an existing company is the external reconstruction. So this will be your answer. Okay, we move forward to the next. Which of the following is generally not an objective of mergers and acquisition? Which of the following is generally not an objective of mergers and acquisition? Achieving economies of scale, market expansion, reduction of competition, increasing legal dispute. So we know very well the answer. The answer is D. Yes, it's not the purpose of what to say, mergers and acquisition, increasing legal dispute. This is not the intention of mergers and acquisition. So we do mergers, the companies come together, or mergers and acquisitions take place because to achieve economies of scale, market expansion, and reduction of competition. So it is not for increasing legal disputes. Okay, we'll move forward to the next. Internal reconstruction of a company generally involves dash. So generally internal reconstruction, liquidation of the company or formation of a new company, reorganization of capital without forming a new company, compulsory merger with another company. So we should know answer by now. Yes, the C could be the correct answer. That is reorganization of capital without forming a new company. So liquidation of the company, no, it is shutting down of the company. It's not internal reconstruction. Now, formation of a new company wherein two companies come together and form new company, that's not internal reconstruction. Internal reconstruction means within the organization we do the work. So within the organization when we do the work, it is internal reconstruction. Then compulsory merger with another company is also not internal reconstruction. Okay, next question. Reduction of share capital during internal reconstruction is governed by the provision of which act? Companies Act, Partnership Act, Income Tax Act, Negotiable Instrument Act. Come on, let's see the answer. Reduction of share capital during the internal reconstruction is governed by the provision of which act? Companies Act. Okay, so we know Partnership Act is not related to this, and Income Tax Act for sure not. Negotiable Instrument also no. So sometimes we can also use the common sense to answer, dear friends. So reduction of share capital during internal reconstruction is governed by the provision of Companies Act. Okay. The next question. When a company purchases the business of another company and pays the consideration to its shareholders directly, it is known as, what is it? We will know exactly. So when a company purchases the business of another company and pays the consideration to its shareholders directly, it's known as absorption. Yes, when a company purchases the business of another company and pays the consideration to its shareholders directly, so it is absorption. That means I take over. That means is taking over, A is taking over B. Okay, A is taking over B and pays whatever is B is due. Whatever is B is due, it's taken care. So that is called absorption. That is called absorption. Okay. Which of the following method is commonly used? Commonly used to determine purchase consideration in mergers. Dear friends, this time also this question had come. Okay, so which of the following method is commonly used to determine purchase consideration in mergers? One, which of the following method we use? Yes, both net asset method also we use, net payment method also we use. Okay, which of the following method is commonly used to determine purchase consideration in mergers? Is net asset method and net payment method. Net asset method and net payment method. The excess of purchase consideration over the net asset acquired. Net assets acquired is known as. The excess of purchase consideration over the net assets acquired is known as, what is it? Yes, we should know by now. Goodwill. Goodwill is the excess of purchase consideration over the net asset. So I am buying a business for 3 lakhs wherein its worth is only 2 lakhs, wherein its worth is only 2 lakhs. So the 1 lakh will be my goodwill. The 1 lakh will be my goodwill. So excess of purchase consideration over the net asset acquired is known as goodwill. Okay, the next question. When net assets acquired exceed the purchase consideration, the difference is called. So the previous question and this you understand, right? So when the net assets acquired exceed the purchase consideration, that means I am buying the business for 3 lakhs wherein my business is of around 4 lakhs worth. So in that scenario, the excess is treated as, what is that? Yes, capital reserve, capital reserve. So when the net asset acquired exceed the purchase consideration, the difference is treated as capital reserve. Okay. Next, in mergers and acquisitions, synergy refers to. See, synergy. Synergy is a very important word. What you may understand now? Now, synergy means 1 plus 1 is equal to 3. So that is what the meaning of synergy. So in mergers and acquisitions, synergy refers to the combined value greater than the individual companies. So the combined value greater than the individual companies. What happens when two companies together work? Their output becomes better than the two companies individually working. Okay. So the combined value greater than the individual companies. Okay. Now, which of the following stakeholders must generally approve a scheme of amalgamation? Now, when the company come together for amalgamation, which of the following stakeholders must generally approve a scheme? Generally approve a scheme. Which of them should generally approve the scheme? Creditors and shareholders. Which of the following stakeholders must generally approve a scheme of amalgamation? Creditors and shareholders, because creditors whom you need to pay, and shareholders the real owners of the business whom you must consult before the amalgamation. Okay. Yes. So internal reconstruction usually takes place when a company is, yes, financially strong, or has heavy accumulated losses, or want to expand internationally, or issues bonus shares. Okay, the answer is very clear. It is when has heavy accumulated losses. When it has heavy accumulated losses. So when the company goes internal reconstruction, when it has heavy losses, so it reduces its share capital and how it can pay back its liabilities and reduce the share capital so that the company can what to say perform better or enhance its performance. Okay. Okay, the next question, the arrangement in which the rights of shareholders and creditors are reorganized to improve financial stability. Financial stability is known as, already we saw, is it reconstruction, liquidation, acquisition and consolidation? So it is for sure reconstruction. So the arrangement in which the rights of shareholders and creditors are reorganized to improve financial stability is known as reconstruction. Okay, the next question, a merger between two companies operating in the same industry and producing similar product. Similar product is known as. So a merger between two companies are operating in the same industry producing similar product is what? Horizontal merger. So a merger between two companies operating in the same industry. For example, this is also clothing, this is also clothing. Okay, company A is also clothing, company B is also clothing. Now producing similar product t-shirts, similar product t-shirts. Now when the merger takes place between same, this becomes horizontal. This way means it is horizontal. Now this way it happens, then it is called vertical. So vertical, we will see other question. Now it is, the answer is the horizontal merger. Next question. When a company merges with another company that operates at a different company that operates at a operates at a different stage of the production or supply chain. So for example, I am producing car, I go back and I also produce what? Tires, manufacture tires. Yes, tires. Then also I go back and also tire material I manufacture, tire material also I do. So this type of in the same supply chain, so I need to make car, I need tire, I need also the leather. So this type of is called, already we know, when a company merges with another company that operates at a different stage of production or supply chain, is that vertical merger. Vertical merger. Okay. A merger between companies that are related through technology technology market, but do not produce identical products. There is no identical products. A is different from B, A is different from B. Then what will become? It is like congeneric. Oh, reverse merger, sorry. So a merger between two companies that are related to technology or markets, but do not produce identical product is called reverse merger. So same technology is used but different product, okay, that is called reverse merger means same technology or market but do not produce identical products. Okay, when companies operate in completely unrelated business combine, okay, unrelated business, the merger is called, yes, we know, conglomerate. So A is producing cloth, B is producing cars. So altogether different, completely unrelated, nothing to do. Cloth has nothing to do with the cars. So such business is called conglomerate business, conglomerate merger. This, please remember these things. I think they are asking these days simple questions, but you will remember the basic concepts. A merger in which a private company acquires a publicly listed company to obtain listing status without going through IPO. So initial public offering they don't want to go through. So such time they are going to acquire already a listed company, already a reverse merger, so they are going back to, so private company is trying to acquire already listed company, sorry, a listed company, already a listed company is called reverse merger. Okay, next, in a forward merger, the target company survives and acquiring company dissolves, which is correct. Acquiring company survives and target company dissolves. Both company dissolves and form a new entity, or both companies continue separately. What is your answer? In a forward merger, what happens? In a forward merger, what happens? See, in a forward merger, acquiring company survives and target company dissolves. Okay. So, in a forward merger, acquiring company survives. So, I am acquiring a B company, then I survive, the other company cease to exist. Okay, which type of merger involves the creation of subsidiary by the acquiring company to merge with the target company? Which type of merger involves the creation of a subsidiary by the acquiring company to merge with the target company? See, which type of merger involves the creation of a subsidiary by the acquiring company to merge with the target company? Shall we see? Shall we see what is the answer for us? Yes, triangular merger. Which type of merger involves the creation of a subsidiary company? Uh, so they are creating a new company. So triangular merger. So A is there, B is there, again C is going to be formed. So this kind of merger is called triangular merger. Next, a merger mainly undertaken to achieve economies of scale by combining competitors in the same market is combining competitors in the same market. Yes, horizontal merger, same market, this way. Vertical, this way. Okay. So a merger mainly undertaken to achieve economies of scale by combining competitors in the same market is called, yes, a horizontal merger. When a company merges with another company to diversify into unrelated industries and reduce business risk. Yes, we will know already the answer. Yes, we know the already the answer, conglomerate merger. So unrelated, when you see this, A is different from B. A is different from B. That is conglomerate. Conglomerate means unrelated to reduce business risk. Okay. Next, a merger between companies that sell different products but serve the same customer base. Different product but serve the same customer. This one customer base is congeneric. Generic means same. Congeneric means a merger between companies that sell different products but serves the same customer base. Serves the same customer base is known as congeneric merger. So thank you so much, friends. We saw 25 PYQs within 20 minutes, and I know you all already know the basics and concepts. It's only the PYQs I collected, and I wanted you to see all in one place. And if you like this video and you want to have more videos only on PYQs, please let me know and say in the comment that whether you like this video, what I could improve, so that I also can give you accordingly. Do you want in this or any particular language you want to mix of Hindi or Tamil or English alone? So let me know. I will accordingly provide the notes. Now for the moment I don't have ready-made PDFs, only the videos I have. So in the future I would like to give you the more videos on PYQ before this 2026 June exams. Let me know in the comment section which topic PYQs you want next. Let me know, friends, and if you like the videos, please share with your friends, especially those who are looking for the PYQ series, and let me know in the comment which PYQ you want to have, and at the same time how is the session also. Please let me know. I will provide you whatever you like to have. Thank you for watching, and stay tuned for more videos by UGC Net channel.